Welcome to this presentation of how to add to your position size. This is the Specialist Trading Weekly Mini Lesson for the week ending December 13th, 2012. First of all, I want to wish everyone a Happy New Year. We've been gone for a while. We haven't been giving you that many lessons, that many weekly lessons as of late, but we hope that you have a great 2012. We hope it's as great as 2011 was for us. And this promises to be another great lesson for you. We're going to speak about something that we've rarely spoken about in the past. It's about increasing your position size as you're in the trade. But before we begin, as always, we ask that you please take a moment to view our disclaimer. I'm going to show you some performance results using a technique to increase your position size. But remember that we can in no way guarantee that any of these results will be repeated in the future. So please take a moment to view our disclaimer, and then we shall begin this week's E-mini lesson. All right, so there are three important things that you need to remember when you're thinking about or pondering whether you should be trading and increasing your position size. And these are extremely important, three separate things. And the first one is you must be adequately capitalized. The second one is you must be adequately capitalized. And the third is, you guessed it, you must be adequately capitalized. I just say this to stress how much you have to have enough capital in your account. You have to have enough cash in order to increase your position size. Because of margin, people tend to lose sight that it can be increasingly risky when you increase your contract size. So you must have enough in your account. I know your margin requirements will require that you have enough, but you need to have a little cushion because you can really increase your risk and then you'll cut into some margin for another contract availability, and pretty soon you're back to trading just one contract again. So you must have, I believe that most of the requirements for holding a position, roughly intraday trading anyway, are anywhere from $500 to a couple of thousand. If you're holding a position overnight, that could be $5,000 to $6,000 to $7,000. So you have to know what your margin requirements are, and then you have to have some cushion besides that. So please, most importantly, you must be adequately capitalized. I think that's really summing it up all together. So I would really recommend that if you're going to be increasing your position size while you're trading any one of our strategies, please remember that you have adequate capital in your account. As well, this should also only be included for advanced traders. If you're just beginning trading and you're just new to specialist trading, I wouldn't even consider using any of our techniques to increase your position size, okay? So please remember that this is something that is for advanced traders, and you should have enough capital in your account. Now, the other thing I want to mention also is that we only apply this if we're really expecting a big move. Regardless of what strategy it is, strategy number 1, strategy number 4, strategy number 2 or 3, it doesn't really matter, but you have to be looking for a big move. If you just think you're going to be taking the very adequate exit and just kind of get out with a nice quick gain, well, you shouldn't be using this technique. All right, so let's look at an example here. And remember, it really doesn't matter what time frame, or it really doesn't matter what strategy. All that matters is that you properly execute this particular method or technique for increasing your position size. Now let's say here that we're looking at a 5-minute chart, and we see that this is our setup bar. So we're probably looking at strategy number 4 or maybe strategy number 1, something along those lines. It really doesn't matter, but we found our setup bar. So this means that we're going to be entering once we trade just above, one tick above the high of the setup bar, okay? So as we see how the trade progresses, we see here this is where we enter. So we're long one contract, and we want to use, once we get into the trade, we want to use stop placement number 1, because this is going to be relative to our money management when we start increasing share size. So we're long at the designated entry point, the standard entry point. We placed our stop at stop placement number 1, the standard point for minimizing our risk. All right, so we watch the trade unfold, and as we continue to unfold along these 5-minute time frame, we see here that we get to the 200% range, okay? This is the 200% range of the setup bar. Now, for those of you who are not familiar with that, it's just basically the range of the setup bar, and we just add that range on top of the setup bar. This is the 200% level. Now, normally, this would be one of our standard places to take a profit. This is where we say if you're just thinking that you're going to have a small move, you would just exit at this point and take a quick point or two. But for using this method where we want to increase our contract size, we're going to do something entirely opposite. What we're going to be doing now is we're going to be buying one more contract. So at this point, we're now long 2 contracts. So instead of exiting at the 200% range level, we're now actually increasing our share size. So now we are long 2 contracts. And as well, once we do that, we are now moving our stop to break even. So now we're moving our stop of 2 contracts to our break even of our original entry. So right here, okay? So what this means is that, say we get stopped out, say this doesn't go up any higher and it turns around, well, we'll lose the same amount we would have lost had we just purchased 1 contract, because it's basically the same distance. And on another one, we'll break even. So we'll lose the same as if we had entered the trade originally and we got stopped out. Okay, so now we're long 2 contracts. Our stop is originally where we entered on the first contract right here. And so we watch the trade unfold, and now we go up to the 300% range level. This is simply tripling our range level of the setup bar. Once again, this is another advanced technique for exiting the trade, but instead of exiting, what are we going to do again? We are simply buying 1 more contract. So now we are long 3 contracts. We continue to buy at these range levels, and as we buy here at the 300 range level, we now move our stop to the 200% level. So basically what we're doing now is we're breaking even. So if the trade doesn't go up any further, we're breaking even because we purchased 1 contract here, and if the trade rolls over, well, we'll get stopped out with a loss. We'll break even on the contract we bought here, and we'll actually make the distance from here to here on the first contract, on contract number 1. So we'll break even. We'll make a profit here, and we'll lose right here, so we'll break even on the trade. So this means we are now long 3 contracts, okay? Now we watch the trade unfold even further, and we get up to the 400% range extension level, okay? So does this mean we're going to purchase 1 more contract? We're long 3 already. No, this means we're exiting. We always exit at the 400% range level because over the years we've seen that many times, not always, it's not statistically proven because they haven't researched it that way, but over time we've seen that so often the rally will continue, or the sell-off will continue up until that 400% range level, and then many times it'll turn around, or it'll stop and then turn the other direction. So we want to be out of all of our contracts at this time. So remember, this is why we say you have to be sure or have a fairly good idea that you have a nice move in place. This is not something that's going to work if you're only looking for a small little gain and being able to get in and out very quickly. This is something where you're probably going to be in the trade a lot longer than usual. Maybe from from 1 to 10 bars, maybe you'll be in now from 20 to 50 bars. It may be a lot longer. You may be in this trade, if you're looking on an intraday basis, rather than 15 or 20 minutes, you may be in for a couple of hours because you're looking for that nice extended trend. And you're also going to, because of the way we use the range extension levels while you're adding contracts, you're going to have enough capital to add at least 3 contracts. So you're going to have to be adequately capitalized, as well as you're going to have a cushion. Okay, so what we've done here, if we are able to exit at the 400% range extension level, what this means is we'll make a profit here from buying at the 300 on 1 contract. We'll make another profit here from buying at the 200% range on another contract, and another profit here at the original entry of buying 1 contract. Okay, remember, the main thing to remember is, though, as you get up 1 more range extension level, move the stop up. Okay, as we continue to rise and buy 1 more contract, we move the stop up because we are protecting ourselves. Since we have a lot more exposure, we have a lot more positions now, we have to protect ourselves. We cannot keep our stop at the original place. All right, so things to remember. Remember, this is an advanced technique, so I'd only recommend it to advanced traders. In fact, I have to be very honest, I do not trade by using this technique. I do not add to my position. I'm the type of trader that just keeps my original position and I stay with it. So I'll be honest, I do not use this, but this is something I have seen that has worked fairly well in the past. I'm just not that type of trader where I like to add on to my position. But there are a number of traders who do like to do this, and in fact, as of late, we've gotten a number of emails because our strategies have been working so well. A lot of traders have been asking me for tips and techniques on how to add on to our position. So this is probably the best way I know of how to do that. Now, remember, use only if you are anticipating a large move. This is not a technique to use if you think you're just going to have a small, quick move in the E-mini. This is something where you're thinking that a large move is coming up. You feel the market is poised to go in a large move in a trend direction. Okay. Now, remember, you must exit all the contracts at the 400% level. We've seen through our research, just by on-site research, that many times the trend will end at the 400% level. So it's best to get out of the trade altogether, okay? You must be adequately capitalized. That's the last thing. Don't even try to do this if you're not an advanced trader and if you do not have enough capital. All right, in conclusion of this week's E&E lesson, remember, we're talking about how to add to your position size, but in order to do that, you first must learn the strategy. None of this is going to make any sense unless you know how to enter properly, unless you know where the adequate stop placement is, unless you know how to properly spot the setup bar. So learn the strategies first before you try to properly implement this add-on technique. And the way to learn the strategy is through paper trading. Paper trade a week or a month. It really doesn't matter. Our specialist edge here is consistency. And the way we get that consistency is through practicing, is through paper trading, and then we keep things as simple as possible. Now, if you have any questions concerning what I went over or anything on the website, please do not hesitate to email me at stephenprimo@specialisttrading.com. In closing, I ask that you take one last look at our disclaimer. I showed you performance results using this advanced technique, but please remember that we can in no way guarantee that any of these results will be repeated in the future. In closing, remember, if you have any questions, be sure to email me. If not, I want to wish you all a Happy New Year again. Thank you so much for making specialist trading a great success in 2011, and we look forward to more success in 2012. Thank you so much. We'll see you next time. Bye-bye.